Resuming debate.
Resuming debate.
Resuming debate.
Hi, everyone. Welcome to another episode of the Resuming Debate podcast. I'm your host, MP Garnett Genuis. So there was one section of the budget that provoked a lot of kind of initial discussion. I think in some cases from people who were hearing about a concept for the first time that they weren't familiar with. This is the reference in the budget to halal mortgages. And I'll just read a section of it for those who didn't see it. It says, Budget 2024 announces that the government is exploring new measures to expand access to alternative financing products like halal mortgages. This could include changes in the tax treatment of these products or a new regulatory sandbox for financial service providers while ensuring adequate consumer protections are in place. In March 2024, the government began consulting financial services providers and diverse communities to understand how federal policies can better support the needs of all Canadians seeking to become homeowners. The government will provide an update in the 2024 fall economic statement. So one thing to note about this comment on halal mortgages, as I see it in the budget, is it's not an announcement of any very specific policy. It's just the government saying, yeah, we're looking at this thing. But it did provoke a lot of discussion online and other places, people wondering what are halal mortgages. And as someone who is very interested in questions of both faith and finance, I thought that would be an interesting topic for us to talk about here on the Resuming Debate podcast. Faith and finance being subjects that are not necessarily often discussed together, but that can have a relationship to each other in Islam, but also in other faith traditions as well. So joining me for this discussion, very pleased to have Dr. Mohamed Sawwaf. He is the co-founder and CEO of Manzil, which is the only Canadian Islamic FinTech that manufactures and distributes halal financial solutions, including mortgages and investment funds. Manzil offers fully compliant financial products, including mortgages and investment opportunities that are locally structured and available to Muslim Canadians looking to build wealth and assets. Dr. Sawwaf, thank you so much for joining us today.
Thank you very much for having me on the show, MP Genuis.
So for the completely uninitiated, tell us, what are halal mortgages?
So halal mortgages essentially is a structure or a transaction model that doesn't involve the taking or receiving, or the paying or receiving of interest. And that really is the premise around the compliance or the permissibility. You had mentioned in your opening that this is not just a concept within the Islamic faith, but actually a concept under Abrahamic faith. So under Judaism, Christianity, and Islam, there is the notion of usury, right? You are not allowed to, exploit, transactions that involve money that are not commodity backed or commodity based. And so in Islam, money is only a medium of exchange. And in order for us to avoid interest, which doesn't mean that we're, everything's free. We're not getting free loans here, right? I want to be very, explicit about that. But what we're doing is converting interest into profit, okay? And in order to do that, you have to actually participate in acquiring the asset in some way, shape, or form. So we have two transaction models that basically allow for the participation of the financier to acquire the asset and resell it at a markup or a premium, or you can actually participate in an equity shared model and then they slowly buy you out. But the end result is exactly the same. So I always tell people, when you look at a halal mortgage or a conventional mortgage, you're still paying the same amount. One is defined as principal and interest. The other one is defined as principal and profit. It's only the documentation and the process that is different between the two.
Okay, that's fascinating. And I think it's an important clarification off the top, because some of the confusion was that people thought that that this was the federal government saying they would pay the interest on mortgages, but what we're actually talking about is a kind of private financial structuring. So if you could share a bit about the kind of philosophical thinking behind why this is important. Because I think a lot of people on first blush would say, why is that a problem? And there is a tradition in other faiths of having concerns about this as well. But why should people have kind of moral questions about the idea of interest?
Absolutely. So, from a historical context, Islamic finance actually predates, the conventional or secular finance that we have today, right? Like this is a concept that was introduced over 1400 years ago. And, back then they had commodity based or commodity backed, let's call it, currency. So dinars and dirhams. So a dinar was a gold coin and a dirham was a silver coin. And the difference between the two was that, it took 20 dirhams to equal one dinar, right? Because silver was 20
Mhm.
times less valuable than gold. And this is how they exchanged and transacted. And it was very much a trade-based economy, right? The concept of riba or usury really came from the perspective of, well, we cannot be exploiting, right, certain situations or certain transactions. So I'll give you an example, right? Like if we entered into a transaction where I gave you money and you gave me more money back, right? Me having that money, I didn't really participate in the effort, right,
Mhm.
of earning that money back, right? I just it's a social contract, and in Islam, that social contract should just be, one for one or on par, right? I give you a dollar, you give me a dollar back. Now, but it's unfair to you as the receiver of that money to have to put in all of that work and then pay me back because I was able to capitalize or finance you, versus a participatory based contract where, maybe there's some shared risk between us, or maybe there's risk in a moment of time within that certain asset that you wanted to participate in. And so that is the difference, because when you think about society today, you think about the banking system today, and you can go back to 2008 as the perfect example, right? The leverage that was in the system is really what brought down or created the financial crisis, the subprime loan crisis, so on and so forth. And there's tons of academic studies that have been conducted that actually compared Islamic banks against their conventional counterparts. And, from a risk adjusted basis, the Islamic banks fared better. Why? Because they had less leverage on the books. They had a lot more assets backing, right, their organizations. And so when we think about Islamic finance or Islamic banking as a concept, it's actually better for society. It creates social impact, it creates fairness, it creates equitability, transparency, especially when conducting the transaction model. And we're not looking at the consumers as, vulnerable or trying to take advantage of them in like, the concept of like kicking them while they're down, right? That's not part of, a participatory banking system.
Okay. So just to dig into a few of those points. So I think most people would be nodding to the fact that there are some situations in which a loan with interest can be exploitive, right? There's I think a lot of concern about the possible implications of payday loan
Hmm.
systems, for example.
And we even have
It,
a criminal code, right, around, how
right.
much interest you can charge in Canada. However, unfortunately, it's 60%, right, which is
Right.
still a very high number
Yeah.
at the moment.
Yeah. So this is I mean, has been a live issue for people across different traditions. At the same time, the typical mortgage, right? You can see how when I get a mortgage that involves a modest level of interest, that is, that there is a sense in which that is participatory, because the bank is taking on the risk that I might declare bankruptcy, right? They're taking on also the cost associated with inflation, right? So some of that modest interest reflects the reality of inflation, that money doesn't hold its value, which is a different reality from gold or silver backed money, right? And then also there's some risk that I will not pay back the loan. So doesn't the lender participate in the sense of taking on themselves the risk of of inflation, as well as of, some margin of default?
So when we think about risk, right? In the concept of conventional mortgage, the bank still has access to the asset itself, right? They put a mortgage charge or a mortgage lien, and so do we, right? I think when you think about what is beyond, right, the recourse beyond that, and that's where the difference between let's call it a faith-based financing system versus a non-faith-based financing system can be seen. In a non-faith-based financing system, not only could they take the asset, but because you've defaulted personally, they could go after your personal assets, right? Usually you would sign a PPSA or a personal and property security agreement. Um, Whereas for us, our only recourse is the asset itself, right? So that, I think, from a fairness perspective, is one difference. The other thing too is when you default on a payment, we can both agree that the clock still ticks, right? In the sense that the interest is still accumulating, it's compounding up until the time that they figured out, a payment system. Maybe you got a job back, or even if you had to sell the house in a power of sale,
Mm-hmm.
all of these fees would be added, and legal costs, admin fees, and all of the accumulated interest. For us, when you default, the clock stops. We are not allowed, right, to take advantage of your situation of default. We
Mm-hmm.
cannot continually charge you profit on top of profit on top of profit. In fact, we can't even charge you, let's call it admin fees, beyond our cost, right? So, sometimes you could discharge a mortgage and the bank will charge you $500, right? For us, we actually have to calculate what is the operational cost of us doing that. So we can't charge you $500. We would charge you $150 because that's our cost to do that work. Now, we could charge you more, but that difference would have to be donated towards a charitable organization, right? And this is how we kind of remove the moral hazard piece, because everyone asks, well, let's say if I defaulted at a bank, they would charge me $500 for that default. Well, Manzil only charges me $50 for that default, so I'll continue to default, right? Like,
Mm-hmm.
there's no incentive for me. I'll save $19.50 a month by defaulting because they're charging me such a little. No, we can still do it at 500. Our cost is 50. The 450 gets donated, so that we avoid the concept of moral hazard here. So hopefully that elaborates kind of the fairness and equity of these types of transactions versus the ones that are not faith-based.
Okay, yeah, that's really interesting. Just within the Muslim community, are most people using these kinds of products? Is there kind of variation in terms of belief or practice? How what's kind of the uptake and the variations in the community?
Yeah, so again, through my academic research, we've done a lot of surveys or market research studies that have indicated that if the products were readily available from a mainstream perspective, participation could be upwards of 80%
Mm-hmm.
from the community. That's not the case today, and that's only because the products are not available. If you were to, just jump across the pond, across the Atlantic, and go to the UK, they have a regulatory framework in place that allows for Islamic banks to participate, in the UK banking system. There's banks that are side by side with each other, Islamic banks and non-Islamic banks, and there's optionality. Same thing if you go into the Middle East, like countries like the United Arab Emirates or Qatar or Saudi Arabia. You can even go as far as Malaysia, Indonesia, and Singapore.
Mm-hmm.
These banks are available, and so it's not a new concept. It's just new here. And when we
Yeah.
think about the Canadian Muslim population, which is now at 2 million, 5% or 1 in every 20, growing to 3 million in the next 7 years due to above average immigration rates as well as above average birth rates. Creating this optionality allows for greater participation. And this is part and parcel of the budget piece, right? It's not about forcing banks to create Sharia compliant products for the Muslim community. It's about how do we actually look at our current regulatory framework, our current tax code, our current legislation around introducing these structures. Because I can tell you today, MP, that it costs more to actually participate in the halal mortgage. It's actually more expensive, and there's an additional burden of tax that could actually be avoided. So you can go to a regular bank and conduct your business normally, or you can go to an organization like ours and pay more to get into it. And that's what we see as unfair, right? We're trying to equalize the playing field. We're trying to make this accessible and create optionality. Because I can tell you right now, again, back to the UK example, Al Rayyan Bank, which is the largest Islamic bank in the UK, upwards of 40% of their clientele identify as non-Muslim.
Wow.
So, and the reason for that, it has nothing to do with religion, right?
Yeah.
They'd say, well, it's more fair, it's more ethically aligned with my values. Maybe the pricing was better, right? There's economies of scale there. And it's no different than, you and I, your Parliament's based out of Ottawa. Ottawa is now apparently the capital of shawarma. and
Yes.
So, right? And there's no difference between eating a shawarma with halal chicken or non-halal chicken. It just tastes good, and that's why I would get it, right? And probably the same reason why you would get it. It has nothing to do with religion.
Right. So, I mean, it's a good analogy that a Muslim obviously is going to look for that halal chicken. A non-Muslim is going to be probably indifferent, but is not going to have a problem eating the halal chicken if it's available and tastes good, right?
Absolutely.
A few jumping off points from what you said that was interesting. I think it's probably useful for our audience if you defined some of the words, because you referred to Sharia compliant. I haven't asked you yet what the word halal means. So could you maybe just go through some of the words people would commonly hear so that they can understand what that's referring to?
Yeah, and these are Arabic terms, and I look at them as synonymous, right? We always hear about Sharia compliant or halal compliant, sometimes Islamically compliant. I look at them as synonymous, as just being permissible, right? Permissible within the faith. And that's really how we should see it. And, there's a process and there's rules around what makes it permissible, right? And so as long as you follow the rules, and then it's permissible. And so if I'm saying Sharia, if I'm saying halal, I would expect our audience to understand that they just mean the same thing, and it's really just about permissibility here.
Right. So if I understand right, Sharia means law, right?
That's correct. Yes.
So
that word is law.
Right. And so when you say it's Sharia compliant, it's essentially it's in accordance with the law, in accordance with what's permitted, right?
Or the faith-based rules. Yeah.
Right. Okay.
Yeah.
You mentioned, so it sounds like for those that are interested in hearing more about the experience, how this unfolds, the UK is a worthwhile comparator, and it's fascinating to me. You said 40% of the customers identify as non-Muslim. Do you have data on those folks? Do they tend to be maybe people who have spent some time in Muslim countries, who have more familiarity with it? Do they tend to come from particular other faith traditions? Is it people from certain Christian communities that are seeking out this kind of thing, or is it just no general trends, just whomever is seeking those products?
Yeah, I don't unfortunately have that type of granular data. They're very good questions that you're asking, and as a researcher myself, that would be some questions I would ask. I would just say, it's probably a question of, do you identify as Muslim or not, right?
Right.
And then that's kind of where that stat came from. But let's not forget that the UK as a government, as a country, has had strong relations with the Middle East, right? Even if you go to cities like Dubai or even Saudi, the British, the UK presence is strongly felt. And that's due to these very strong bilateral relations in all facets, in industries, especially in banking. And so, Canada, unfortunately, is the last G7 country to adopt some or any type of framework when it comes to Islamic banking or halal banking. In fact, Australia is, has 1/5 the Muslim population. They only have 400,000 Muslims, and yet they've put together a regulatory framework around this now. So, it's unfortunate that we've been lagging, and I think, we're due. And, no one should consider it as a threat or let's call it favoritism, right, towards a certain faith group. Because just as conventional banks are available to everyone, it's the same thing that works for Islamic banks.
Mm-hmm. In terms of that charge of favoritism, I mean, were you surprised by some of the commentary that responded to what was in the budget? What was your sort of reaction to some of the things that were said in the immediate aftermath?
Yeah, so I'm not surprised, and it really actually comes down to education and informedness, right? A lot of people like to come out with controversial, headlines or sensationalist headlines. I've seen it all. I've been in the industry long enough to understand kind of the nuances and the rhetoric and kind of the thought process behind that. But I truly feel that if once you get educated on this topic, you then start to formulate an understanding as to, what, I can go to a steakhouse today and order a halal ribeye, which is my favorite, and you can order one that's non-halal, and they'll taste great, and they'll taste the same, and there's no difference, right? The problem is why should I pay more for one than the other, right? Or
Mm-hmm.
why is one less available than the other? That's really the premise around this budget piece.
Right. So it's I mean, financial products being much more regulated than food's fairly regulated too, I guess.
It
But
is.
the federal regulation piece around finance means that in order for something to be available, the government needs to be paying attention
Involved.
to it. They're not building the products, but they need to sort of be paying attention to what's happening.
Right, and there's a consumer protection element here, right?
Right.
Somebody just can't come out and say, "Hey, you know what? We have a halal mortgage too." Well, how? Why? Like there's a way to do it.
I see.
We need to ensure that there's a framework around governance. We self-regulate according to global Islamic banking standards, right? So there's an organization called AOFI, which is AAOIFI. It's an acronym that stands for the Accounting and Auditing Organization for Islamic Financial Institutions. It's based out of Bahrain. It's regulated and overseen by the Central Bank of Bahrain. And every Islamic bank globally adheres to these standards, and they're actually members of that association. We were the first Canadian member of that association. And so when you think about our governance practice and what we've put into place, we have our regular board of directors. We also have our Sharia board of directors or Islamic board of directors. We have internal audit on both sides, right? Secular and religious or faith-based. We have external audit, right? So, we have one of the big six, as they like to call them, as our auditors. And then, of course, we bring in external advisors to audit, the compliance of our processes and our operations to instill trust and confidence in the consumers that we are fully compliant to the faith and that we're not halal washing, right? That's what we're trying to avoid here too.
Right. So that you don't have people making claims to try to get into this space who aren't actually. I'm curious. Maybe this is a bit out of left field because it's about food, not finance. But I am curious. How is the process of food labeling, as for instance halal or kosher? How is that regulated to prevent claims being made that are not accurate? Does the government prescribe, like, okay, if you're going to call it as it has to be this?
There are rules and regulations at the federal level, right?
Right.
And there are organizations that follow those rules, and they're the ones that kind of execute or enact, right? So,
Right.
when you go to a slaughterhouse that wants to claim that they, slaughter in a halal way, Maple Lodge, or Maple Leaf Foods, both of them have non-halal and halal slaughtering practices. And so, you can come and claim, and there's organizations out there within these faiths that'll come in and check. And even if you wanted to get set up, they would even assist you in getting set up and saying, this is how you do it, right? And this is now, like, the halal food or even meat industry, I think alone is a $2 billion industry in Canada. This was an industry that we didn't have before. So when you think about, the expansion of the economy, the expansion and diversification, right, of particular industries. We look at halal banking or Islamic banking as another industry that we can, bring, we can grow and put Canada on the map when it comes to, global Islamic finance.
Mm-hmm. Now, in terms of the reaction to this discussion, we're a country of two languages and sometimes two solitudes, and we previously did an episode about Bill 21, trying to just understand what is the different history of Quebec around religion and secularism. I noted some of the comments made in particular by by Bloc Québécois members, and in an exchange in question period from back on April 18th, there was a liberal minister from Quebec speaking in French that actually really seemed to be almost backing off this commitment. She said, I'm reading the translation, but the translation is this is a liberal minister. We are simply going to look at the issue, but our government has no intention of supporting it. We just want to make sure that it's fair. Trying to say, hey, we're not supporting this. We're just kind of looking at it. What is your reaction to what the Bloc has said, and to that response from a member of the government?
Listen, what my response to that would be, again, we are not introducing Sharia law, right? We are not introducing any religious-based rules into Canadian secular law, right? It's not about that. I think her comment about ensuring that it's fair is valid, and I think that's really the tone that we're moving in is, why should a particular financing structure be penalized more, right? If somebody wants to participate in home ownership, right? And we're in an affordability crisis, we're in a home ownership crisis. Why aren't we introducing innovation? Why aren't we tapping into demographic groups that are underbanked, that are underserved, that don't want to participate in a regular way for whatever reason, right? And this has nothing to do with background or faith or religiosity, or your gender identity. Everybody is welcome. If they wanted to introduce or Sharia law or abolish that, well, then why do you have halal chicken in Quebec or halal meat in Quebec, right? Like, it's the same thing,
right?
Then come out and say, you know what, we're not going to allow kosher meat, we're not going to allow halal meat practices, like slaughter practices within our province. So if you're going to allow for that, it's there's no different than in allowing a different financing structure for people to come into home ownership.
Right. I think the point is a strong one, which is, if we're making a product available that is protected by a regulatory framework in the space of food, that's to give people an option, right? And the same principle applies when it comes to financial products. I think that's fairly clear about the at the political level. I wanted to ask you about investment products as well. So aside from the interest piece, my sense is that there are many people of faith, but also people who don't identify with any faith tradition, who are thinking about the impact of their investments from kind of a moral and ethical standpoint. We've talked about that somewhat in Parliament around issues of forced and child labor, for example. Is this part of the objective around the investment products, is to think about what is being invested in, and tell us a bit more about those products specifically?
Absolutely. First and foremost, there is a framework around what you can and cannot invest in, and it's actually split into two categories. There's the qualitative assessment, and then there's the quantitative assessment. The qualitative assessment, everyone may have heard, is you can't invest in companies that are that impact society in a negative way. Let's put it that way. In the ESG world, they would call it, the sinful stocks. We're not, touching companies that involve themselves in alcohol, weapons manufacturing, gambling and entertainment, such as casinos, pork or pork manufacturing, and the like. And it's even an extension into what you had mentioned, child slavery or child labor practices, or the enablement of some of these issues that are that we look at as a first world country, as a developed society, as saying, what, we're not for it, right? So that's the qualitative assessment. Then you have, once you filtered, you have, these number of companies that say, hey, you know what, we like this tech company, or we like this infrastructure company, we like this resource company. Let's now look at the let's look at the books. Let's look at the numbers. And so there's three main ratios that you want to ensure that they fall under in terms of below, right? So there's a debt to equity ratio of 30% or less. So you can't have a highly levered company because, again, it's very difficult to find a company that doesn't have any kind of debt on the books. So the scholars came out with a rule that put a limit on that, right? So that's it's a 30% rule. There's also a liquidity rule, right? They can't have too much cash on the books, because that's also not productive towards the economy, right? You want to be able to have that cash deployed in an economic way to create jobs, to create impact. And that's also a 30% or less rule. Then you also have the 5% of impermissible income rule, right? And the impermissible income can come from what we spoke about, is those qualitative categories or filters. So for example, if let's say you wanted to invest in Hilton hotels, right? You could say, well, hotels sell alcohol, hotels also sell pork, right? But as long as those sales are 5% or less of that net income, you can still invest in that hotel, right? And in fact, that 5% or less that is actually attributed, right, to that investment has to be purified, right? So you take that 5% from the growth of your stock, and then you would purify it by giving it to charity. So these are the two criteria that we focus on when we created, Manzil Invest, which is our wealth management or robo-advisory wealth management platform that allows for this community to invest with the peace of mind that they are not, impacting society in a negative way.
Okay, that's really interesting. So in terms of that ratio, right? You say, okay, like a hotel or restaurant that serves alcohol, that serves pork, that would be fine, but you have to try to identify the percentage. And
yes.
So if it's maybe if it's a kind of a nightclub, probably you're exceeding that proportion. But if it's a standard restaurant, probably you're going to be within that. But then you have to identify that percentage and donate it, and you're not going to invest directly in alcohol,
correct,
pork, pig farm, that sort of thing. So just in terms of these rules, who is responsible for coming up with these rules, and is it debated? Because from as I understand the structure of the Muslim community, it's not as, say, centralized, for instance, as the Catholic authority structure is. So is there general acceptance of these rules, or do some people say, hey, that's not good enough for me, I'm going to find someone who's at a lower percentage or not including these kinds of investments at all?
So these rules that I spoke to you about come from the standard body out of Bahrain, which is AOFI, right?
Okay.
And so they have a scholarly body of dozens, if not maybe over 100 scholars from around the world that not only come from different backgrounds in faith, but also come from different schools of thought.
Okay.
And so when they convene and they discuss these matters and then they publish them, they've agreed, right, universally that we accept this approach. And so this way, if somebody comes from a different school of thought, it's applicable. right? It becomes applicable to all four. And so, yes, it then becomes generally accepted, right? It's not centralized with just one individual who then calls the shots, such as the Pope.
Right. Okay, so that's a different approach where you try to take people from different, I guess the Christian equivalent would be denominations from different schools of thought, and say, can we agree on a common approach, so that
so then they create universality.
Right.
Yeah.
Yeah. So since we're sort of on this sort of interreligious comparison, so I wanted to share a little bit about kind of some of the Catholic thinking around usury, and maybe this is something you're familiar with, and I'd love to hear your thoughts and reflections on it. So I'm a Catholic, and there is a teaching around usury, as you mentioned, right? There's a whole history of Catholicism not allowing usury. That today is interpreted maybe not dissimilar from the way you talked about looking at sort of reasonableness within the context of the financial system. So there isn't a separate Catholic financial system in the same way. There still is a teaching on usury, in the sense that if you are doing things financially that are disproportionate, that are exploitive, that historical tradition, which was applied in a much maybe in a different way historically around a sort of complete prohibition on interest, is now applied more in terms of kind of proportionality, right?
Mm-hmm.
And still very much holding to the philosophical underpinnings of that around, you should not have financial interactions that are exploited. But I think it's also fair to say that if Thomas Aquinas engaged in time travel, he would be surprised about what we're doing today in this space. What are your kind of thoughts on some of that history, and why do you think the Islamic world has not gone that direction of kind of nuancing the interpretation in terms of proportionality instead of a kind of more absolute approach?
Yeah, absolutely. And you had mentioned kind of a couple of key terms around, even earlier on, like inflation and time value of money. These are concepts that aren't applicable in Islamic finance, right? Like the concept of money, especially in this time, right, where it's fiat currency, right? Like it's not backed by the dollar like it used to be, and so it just becomes a medium of exchange. So unless you don't have the understanding that that's all that money or currency can do for you, then it becomes very difficult to apply it in the sense of proportionality, right? Money is a medium of exchange, and it's there are very explicit verses in the Quran, as well as the teachings of the Prophet Muhammad, that talk about this and how to avoid it, and that it needs to be avoided. Like, it is a sinful activity. It is an activity that potentially could put you into hell. And so I think maybe that's where, let's call it, the strength within the Muslim community around this topic is far stronger than, let's call it, a Catholic or a Jew around this topic, and no different than halal meat, right? Like, I think these are two main things that we feel strongly about as part of our faith, and that we don't want to compromise on.
Yeah, I mean, and I appreciate that and very much, respect that. At the same time, I mean, I'll just pose the question. We you were talking earlier about investments, and there is an openness to say,
Mm-hmm.
in the practical world, there are limits to the extent to which you can apply it completely. So we're going to establish a reasonable standard or a reasonable percentage, right? So that is
Right.
Perhaps analogous to what other faith traditions have done, which is to say, okay, there's if my neighbor is struggling to feed his family, and I say, well, okay, I'll lend you a bit of money and you got to pay it back at 50% 2 weeks from now. That's exploitive. That's usury. That
Right.
I think, like, I think the Catholic tradition would regard that as a sin as well. But that being different from, from the way interest is used today. I'm also just like really interested in your comments about fiat currency versus
commodity-based currency.
Yeah, exactly.
Yeah.
So, but
So
maybe you want to respond to my first comment, and then we can
I
dig
do.
more into the sort of
Yeah, absolutely.
fiat versus commodity-based currency. Yeah.
And when you talk about, let's call it the rules around halal investing, and that was an ijtihad, right? Like that's what we call like a deep dive research, scholarly body discussion for them to come to this point, and it stems from the Quran, the verses in the Quran. It stems from the teachings of the Prophet. So there's research and analysis to be done there.
Yeah.
And there are situations like, let's not forget that not 100% of Canadian Muslims rent, right? Some of them actually own, and they have a regular mortgage. And so what they've done, and some of them have gone to particular scholars and say, hey, this is my situation. I've been renting for 10, 15, 20 years. Now, I have a big family. This landlord doesn't want to rent to me. That landlord doesn't want to rent to me. I can't be homeless, right? I can't go on the streets, right? So, in particular situations, that scholar might say, you know what? In your situation, it's permissible for you to get a regular mortgage. However, if a halal, option becomes available, the obligation now has to switch that way, right? There isn't a universal interpretation on that. It's
Okay.
very specific, it's very case by case, but there is flexibility within the religion when it comes to these types of situations.
Yeah. Well, I think there's probably a lot of people who haven't even thought about kind of this question of interest as potentially having moral and ethical content. So it's probably an interesting just space to open up for thought, to say, for people watching and listening, to say, what do I think about this question of there maybe being moral and ethical content here? Let me ask you about the monetary policy question. That's maybe another spicy one to get into. Is the implication of what you're saying that that a commodity-based currency, something like a gold standard, is more in line with the teachings of Islam, and is that something that people would typically advocate for, is a movement away from inflationary currency to a more commodity-based currency?
Absolutely. And the best example I can give, kind of in terms of a modern day debate that's happening amongst scholars within Islamic finance, is cryptocurrency, right? Cryptocurrency is decentralized, and a lot of Muslims want to invest in it or participate in it, and a lot of the scholars have done their research, and they say, well, what is there utility around it, right? What is the purpose, right? Is it to act as an actual currency, by which means then, yeah, go ahead, or is it an investment, and then what, you have to go back to the qualitative and the quantitative criteria that we spoke about. An interesting piece, there was a cryptocurrency that came out of Dubai called One Gold, right? And so they were able to back their cryptocurrency with physical gold, and that was approved amongst the scholars, right, as an eligible cryptocurrency that could be used, that could be created, that could be invested in and held. And so
is that just to jump in here, that's like basically like you're buying a gold shares in a certain proportion, but in a form that's digital, easily transferable. So
that's right.
So it imagines a world in which I could go to that shawarma place in Ottawa and say, some very small quantity of gold transferred via app would get me a shawarma.
Yeah. And just to extend that thought, like, because when we think about 1400 years ago and what the Islamic finance system was, right? Let's say you were a camel herder, okay? And I wanted to buy a camel from you. And you would come to me and say, hey, Mohammed, this is, let's call it 1 kilogram of gold, okay? So I would purchase, right, that camel from you for 1 kilogram of gold. And and then in the future, right, what is fluctuating, right? What's fluctuating is the value of gold, because it's actually worth something. How do I obtain more of this gold in order for me to buy more and more camels, right? And sometimes it decreases, right? There's devaluation, there's increase in valuation, and so when you create, right, an economy that's actually asset backed or commodity based, it's actually a stronger economy at the end of the day, right? It's very trade based with respect to that.
Mm-hmm. Because essentially, correct me if I'm wrong, but this speaks to the basic justice issues around inflation, and something that conservatives have been speaking a lot about in Parliament, about how when the government says, well, don't worry, we'll just increase spending and
print more money.
Print more money, that the effect of that is that people who've worked hard and saved, people that rely on fixed income, they lose, they're losing a huge amount of value through a kind of hidden inflation tax, because what they've worked for and earned loses its value. But the kind of economic system you're talking about is one that is that seeks greater justice by protecting. There's still fluctuations in the value of gold or whatever else.
And it's based on supply and demand at the end of the day. Right. It's not based on an individual or a number of individuals saying, well, let's just push this button and print more money, and then everything becomes devaluable. Why? Right? Because you decided you wanted to spend more money.
Yeah. So do you think, I mean, we've talked about halal finance as something that Canadian Muslims and maybe others for various reasons might want to opt out of the traditional financial system. Are there principles of Islamic finance that you see as, and we talked about one, which is inflation, but are there other principles of Islamic finance that you think could be informing changes to the sort of quote unquote secular financial system, the traditional financial system?
Absolutely. And I'll give you the best example. If you recall, during COVID, right? A lot of people were home, economy was declining. Some people got let go or laid off. And, homeowners that had a mortgage, we saw rate relief, right? We saw payment relief. Mm-hmm. That in and of itself is an Islamic finance attribute, right? I applauded that, publicly. And I said, this should be an embedded principle from day one. It shouldn't have been reactionary, right? Like, mm-hmm. and that is the concept of having compassion, having sympathy or empathy towards a certain situation. So, when the bank said, we will allow you or give you more time, right, to pay that money back and defer these payments. Mind you, they still accumulated the interest along the way. But, at the outset, the notion of, you can't make a payment and we're not going to take your home from you, that I think should be a value of the Canadian banking system. And why not, right? Like, we were better for it. The economy didn't crash. We didn't skyrocket in default rates. And we just pushed those payments that were missed, further down the road. And that's absolutely fine. And that's a principle of Islamic finance that could be adopted widely, right? To introduce more fairness amongst consumers.
So, Mohamed, this has been really interesting. In the last few minutes we've kind of gone bigger and bigger in our conversation, talking about broader reforms and inflation. And I want to just, as we conclude, really zero in on the the financial relationship, the products at a concrete kind of user level. So if I'm coming to you as a banker in a kind of traditional finance context, I'm saying, okay, I'm going to buy a house, so I need to borrow money. So you say, okay, here's we'll check you out, we'll lend you some money. This is the interest rate, and if you can't pay me back, then it's backed by the asset, right? So in Islamic finance, how is that relationship different? I come to you, I say, I need money to buy a house. And you've talked about it not being interest-based, but it being participatory. So it's something like you're saying, okay, we're going to buy that house together.
Or I'm going to buy it and then resell it to you. Because when you think about Islamic banking, we don't actually lend any money. I never gave you any money in that exchange, right? I bought the asset, I resold it back to you. And for the convenience of paying it in installments, I'm putting an embedded profit rate that would have been equal to the interest rate at the bank across the street, right? Or we're investing in this property together. I'm acting like a silent investor or a shareholder. You're in the property, you have title, you have ownership, you have full use of the property, and you are just slowly buying me out because I'm now selling my equity position on a monthly basis. And so you get to increase yours and mine decrease. And then at the end of the day, after 25 years, let's say you own 100%, I own 0, and we're no longer part of that deal. And the other deal, well, we sold it off to you as long as you finish your payments, same thing, right? So the exchange of money actually never happens.
Right. Okay. So in some ways, you might argue for the user, it's the same. But on the other hand, there's a structural difference which reflects a principle, which is that you are participating. You're not lending money. You're participating with me in the venture by owning the house and selling it back to me, or through some of the other structures that you've described. So, given the similarities, you mentioned earlier that oftentimes these products are more expensive. If it's just a similar structuring of the same thing, why is it more expensive?
So it's multifactorial. First and foremost, because the structure is different, like let's call it like the legal costs, the closing costs of that mortgage are higher.
Okay.
Typically a mortgage closing is maybe $2,500 or $3,000. With us, it's about $5,000, and that's because we have to introduce a corporate structure that they have to create to formally create this relationship, right? And there's no economies of scale. There's only particular lawyers that would be willing to take on a new structure or mandate as part of their product shelf, right? The other piece, right, is really the cost of capital, right? And how do we access good cost of capital? Because we're not a bank. We're not a Schedule I bank. We're not a financial regulated financial institution, under the auspices of OSFI. And so we actually have to tap into retail and institutional investors that expect a higher return than they could get anywhere else. And so that price, right, goes down to the consumer, and that's why they end up having to pay more. Versus, right, conversations that we've had with banks that have said, you know what, we're okay with the structure, right? However, the bank's model is to off-balance sheet all of their mortgages, have them insured by CMHC or a third-party insurer like Sagen or Canada Guarantee, and then pool it into the Canada Mortgage Bond Program, which is a securitization, right? And CMHC has the monopoly on the Canada Mortgage Bond Program. So they've all said, hey, if you can get this insured and get CMHC to pool it, we're in, right? Not only did we get an insurer, we got multiple insurers saying, we're okay. Like, we've done our due diligence. There's no additional risk. We're happy to insure it. And we had banks willing to participate in the funding of that at the same cost. So imagine now the bank saying, we'll give it to you for the same cost because it expands our portfolio. There's diversification. Maybe we tap into a market that we were never able to tap into before, because it's not just a financial inclusion piece, it's a financial exclusion, right? Concept, because we are not participating as much as we would like to because those products don't align. CMHC really is the backlog here, or the blocker, right? they need to open up a pool type that accommodates this structure, so that the banks can say we'll fund it, and the insurers will say we'll insure it. And this way, it becomes mainstream, right? We can get into everyone's hands, whoever wants it, in the tune of billions and billions and billions of dollars of this stuff.
So it sounds like what you're describing is that those factors that currently make these products more expensive are transient. They're not sort of permanent problems, but they're problems
not
that are
at all
a function of the kind of current realities that will change, that could change, likely will change over time.
Absolutely. And this just comes down to innovation, right? And how open are we as a society, as a government, as industry, to competition and innovation of products, right? Like we need to evolve, because we can't keep continually operating with status quo.
Mm-hmm. Thanks again so much for coming on, Mohamed. Is there anything that I missed? Any other points that you think are salient that you'd like to put out there? I'll give the last word to you on any point you want. But thanks again. This has been a really fascinating conversation for me, and hopefully eye-opening for people who listened, and hopefully people will just whatever their background is, reflect a little more on some of the I think important philosophical questions this conversation raises.
No, absolutely. And I think you've asked, I would say, the most comprehensive and unique questions of all of the interviews that I've had thus far on this topic. So I appreciate that. I don't feel like a broken record anymore. And this is really just all about diversity and inclusion and optionality, right? And accessibility. There's nothing, there's nothing that should be stopping us as Canadians, right? To create a stronger fabric, especially for those that are coming into this country, right? Home ownership, just as final thoughts, Canadian Muslims participate 50% less than the typical Canadian in home ownership. And it's not due to our balance sheets. Our balance sheets are strong, but we just want a product that aligns with our faith so that we can actually tap into home ownership. And even now there's studies that are coming out around, well, how much does, home ownership or the equity that you build into a home participate in your overall net worth? For individuals that are less than 40 years old, it's actually 60% of your net worth. And for those that are older, like 65, right? 65 and up, it's 40%, which is still very significant, right? They've had time to accumulate assets elsewhere, but it's a very integral part of an everyday Canadian. You create stability at the home, which is also known to create, better education and better, Samaritans in society. You create the opportunity to grow wealth and to pass on that wealth to multiple generations. So why not? There's so many positives, right, around home ownership in Canada. And we always used to say that was the US dream, but it really is the Canadian dream these days. Mm-hmm. And let's not create barriers to allow that to be fulfilled, no matter what your background is, religion, gender, or creed.
Excellent. Well, thank you for that final pitch. And obviously, home ownership, making homes more accessible, along with inflation. We've touched on a few topics that are big topics of discussion in Parliament. So thank you again for joining us, and thank you to everyone for watching and listening. This is the Resuming Debate podcast. We release new episodes about every 2 weeks. If you liked what you heard, please share, like, subscribe, leave a review. We're getting more and more people following us on YouTube, where we release these podcast episodes as videos on YouTube, as well as on all the other platforms where podcasts are available. If you want to listen to the audio version on the go or watch us on YouTube. Thanks very much again for listening to this episode of the Resuming Debate podcast, and we'll be back with another episode again in 14 days.